In this video, I'm making a prediction about what's going to happen on July 30th. On that day, the Federal Reserve will decide whether or not to cut interest rates. So back in June, the Fed projected 2 more rate cuts before the end of 2025. And that came from their official dot plot. And yes, there are 4 meetings left this year: July 30th, September 17th, October 29th, and December 10th. So what's going to happen? Because this matters a lot. Because if the Fed starts cutting rates, it's going to be inflationary. It'll also help push up stocks, Bitcoin, precious metals, and real estate. Here, let me walk you through it. The Federal Reserve has what they call dual mandates. 1, maximize employment, and 2, maintain price stability. In plain English, that means keep the job market strong and inflation under control. Now, whether they're doing a good job or not, that's up to you to decide. Now, the most recent jobs report for June was released in July, and it beat expectations. The U.S. labor market added 147,000 jobs, beating the expected 118,000. And unemployment fell by 0.1 percentage point, from 4.2% to 4.1. So what does that mean? Well, if the labor market's doing fine, there's less pressure on the Fed to cut rates. The jobs data isn't calling for it. And that's one reason not to cut. Now, I want to show you a clip here from Jerome Powell, the Fed chair. He talks about how strong the labor market is and why he's holding off on rate cuts. He says they're watching tariff-driven inflation.
The U.S. economy is in solid shape. Inflation has come down. The unemployment rate remains at 4.2%. As I mentioned, real wages are moving up. It's a good job creation is at a healthy level. Unemployment, again, as I said, low. Labor force participation in a good place. And what we're waiting for to reduce rates is to understand what will happen with really the tariff inflation. And there's a lot of uncertainty about that. Every forecaster you can name who is a professional forecaster with adequate resources and forecasts for a living is forecasting pretty significant. Everyone that I know is forecasting a meaningful increase in inflation in coming months from tariffs, because someone has to pay for the tariffs.
Let's look at the CPI inflation report for June. Headline inflation rose from 2.4% in May to 2.7% in June. That's a pretty sharp jump. And yes, goods inflation led the way, especially in categories like apparel and furnishings. Retailers are slowly passing on the cost of tariffs to consumers. They don't want to scare off buyers, but the prices are still climbing. And according to Powell, if it weren't for the tariffs, he'd already be cutting.
Chair, would the Fed have cut more by now if it weren't for the tariffs?
So I think that's right. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs.
So where are we now? Well, we've got the strong labor market, so there's no reason to cut there. Then we have inflation ticking up, so there's no reason to cut there. And that's why, as of this snapshot on July 23rd, the CME Fed Watch tool shows a 97.4% chance the Fed won't cut at the July 30th meeting. And I agree. I believe there's a very high chance they hold steady in July. The next meeting is September 17th. And as of now, there's a 37.2% chance they still won't cut by then. Why? Well, because the Fed has taken a wait-and-see approach, mostly waiting to see how the tariffs impact inflation. Powell and others have said the effects of tariffs will take months to show up in full. There's still a lot of uncertainty out there. Now, you've probably seen this making the rounds. President Trump has been pushing the Fed to cut rates and even tried to fire Powell, but he can't. The Supreme Court has ruled the president needs valid legal cause to remove a Fed chair. Criticism or disagreements, they don't count. Trump's most recent attempt, well, he pointed out that the Fed went $600 million over budget on a $2.5 billion headquarter renovation and tried to use that to justify firing Powell. But that's not going anywhere.
Sir, so. President, are there things the chairman can say to you today that would make you back off some of the earlier criticism?
Well, I'd love him to lower interest rates. But other than that, what can I tell you?
So Powell is likely to finish out his term, which ends in May 2026. But once that happens, Trump will get to appoint a new Fed chair, and that new chair is expected to cut rates more aggressively, especially if Powell keeps delaying. When that happens, expect a surge in stocks, Bitcoin, precious metals, and real estate shortly thereafter. And it may not stop at rate cuts. There's also talk of quantitative easing, basically money printing, if Powell doesn't start it himself. So here's the deal. Don't expect a rate cut in July. It's not going to happen. Now, those September odds I mentioned, they'll shift quickly after two key events. One, the FOMC press conference on July 30th. Everyone will be watching Powell's language very closely. Two, and by mid-August, we'll have a much clearer view of how the tariff situation is evolving. And I'll keep you updated as this plays out, as always, but it feels like the Fed is kind of trapped. But the worst trap is thinking that you have to wait. The rich aren't waiting. They're not saving. They're borrowing strategically, using good debt to buy real assets before inflation eats the dollar alive. And if you've never learned how to do that safely, legally, and profitably, watch this next to learn the cheat code they didn't teach you in school. All right, thanks for watching. I'll see you next time. Maybe I'll see you over there. Take care.